Companies are coming back to the U.S. So, as investors are enjoying the second longest bull market in history, a new survey by the University of Michigan revealing the average American thinks the economic situation right now is, quote, as good as it gets. And that is where private wealth advisor Derek Kinney comes in. Thank you so much for being here.
Pleasure. Thank you.
The question is, how much more can this run?
Well, it certainly could keep going. The problem is people are scared right now. Maybe they've missed this run-up. If people have stayed in the market since the election, the market's up 25% since November of last year. Clearly, they've benefited and made quite a bit of money. The problem, though, is could we see a fall in the market? Could we see a correction on the horizon? That's what's concerning many consumers right now.
But then you think of the opportunity that's there, right?
There is.
If there is a fall in the market, if there is a correction, that could really scream opportunity for certain investors.
Well, take, for example, we've seen the devastation of these natural disasters, and my heart goes out to many of those people. But there is some economic opportunity coming out of that in terms of rebuilding. In Texas alone, 300,000 automobiles need to be replaced. So there's clearly some economic opportunity. The challenge is, can investors know what to do and not put too many eggs in one basket? If that basket falls, all those eggs could crack pretty quickly.
Okay, you mentioned that, though. Is it too late for some people who might be watching going, okay, I've got a little hope here?
Sure. Based on their time frame. If they're about to retire, say, 20 years from now, they've got time on their side. If they need the money right away, I wouldn't put the money in stocks. Here's a good strategy. If you have a 401k, perhaps a retirement plan, as you're easing money in every paycheck, you can do that, kind of a dollar cost averaging strategy, but don't put too much in right now. Keep in mind kind of a worst case scenario. If the market drops, how would you be if your account lost 10, maybe 20%? If that could derail you, I might stay away from stocks right now. Okay,
well, as high as we are seeing some of these stocks climb, let's talk about profits. Is this the time to pull some of your money out and win or reinvest?
Sure. Let's say a person has debt. They've always wanted to pay their house off. They've got some credit card debt, perhaps an education loan. This is a great time to assess, do I need to pay this debt off? For example, if I'm making 20% in the market, and my debt maybe 18%, this could be a great time to take the profits, pay those things off. One regret people shared with me back in 2008, if I could do it all over again, and the market was up again, I would pay this off, pay this off, pay this off, and have something to show for it. That's what investors want. So it's always good to keep betting on it may go higher and higher. Sometimes it's best to pause, take a break, take some profits, and get debt-free as quickly as you can.
And get a breather.
That's right, take a breather.
Give yourself some relief.
That's exactly right.
Derek Kinney, pleasure to have you here today.
My pleasure.
Thank you for the insight.
Appreciate
it.
You bet.
Gilma?
Thank you, Kaley. Breaking news in the fight to keep